There is big news in this month. The average AUM of the Indian mutual fund industry has witnessed a growth of 4.21% in April, and by the end of April 25, the AUM has crossed 70 lakh crore. Overall, the industry has registered net inflows of 2.78 lakh crore, and a majority of the net inflows has come through debt funds, with liquid funds alone contributing to 1.2 lakh crore. Apart from that, the mutual fund industry has received gross monthly SIP, the net inflow of 26,600 crore, which is the highest gross net inflow so far. Here are the key highlights of the 70 lakh crore mutual fund industry. Out of the 70 lakh crore in equity funds, such as the flexi cap, small cap, mid cap, and large cap funds, the total AUM is 30 lakh crore out of the 70 lakh crore. Income or debt funds constitute around 18 lakh crore. Hybrid funds, which are the arbitrage funds and the multi-asset allocation funds, or the retirement fund and children fund plan, put together have an AUM of 10 lakh crore. Passive funds or ETF, which are actually at a pretty nascent stage in India, have an AUM of 11.5 lakh crore. Now, this shows that the risk capital in equity is more compared to fixed income or debt. The SIP trends, the number of contributing accounts has increased to 8.3 crore compared to 8.1 crore in the previous month. In 1 month, this has increased by 20 lakhs, which is overall a great start in terms of net inflows for the mutual fund industry. The debt schemes with maturity of up to 1 year have seen strong flows, reflecting the uncertainty in the minds of investors, which is as of now. The recovery in mutual fund flows in April is encouraging, especially after the typical quarter-end outflows seen in March. Debt categories like liquid, overnight, money market, and ultra short term have seen a 6-month high in the net inflows, which is a positive sign. It is also encouraging to see an uptick in the large cap flows, which aligns actually with the current market environment. This trend underscores a growing awareness among the investors, what we call the retail investors, and the importance of staying invested through the market cycles and systematically building wealth over a period of time. This shows that the retail investors are actually doing that. While geopolitical developments and border tensions may induce short-term market volatility, investors are encouraged to stay focused on their long-term financial goals. Now, reacting impulsively to temporary market movements can derail investment strategies. India's economic fundamentals remain resilient, and the long-term growth outlook continues to be very, very strong and promising. We continue to do what we like to do the most: stay invested.